It's all about how to locate a mitigation block. Now, I know many of you might be confused with the whole difference of order block, mitigation block, breaker block, rejection block, block. But these are institutional reference points that are very important when you are doing your top-down analysis or when you're analyzing the chart. Now, we know market moves in an uptrend like this, right? There's an uptrend here, market comes down here, market goes up here, market breaks down here, and we just formed an M. Let me do it again so that you can see it clearly and more bigger. Now, market is going on a bullish momentum. Market did this, market came down, market did this, market broke the low and came up here and went down. Now, this is very simple. You would have been seeing it on your chart, but you'll be wondering why market is reacting there. Now, there was no break of structure. That is number one. There is never a break of structure. Market had gone in here trying to assume a break of structure, but there's a secret I want to show you on this video. If you can watch the video on swing point, you would understand what happened here. There should have been a swing point here that would have created a break of structure out here. It came here, created an order block, which was the last candle before the impulse move, but market did not break out here. Market came and broke this low under here. You will mark that last candle, which was the order block that was meant to break out as a break of structure. You will mark that zone as what? A zone for entry for change of direction. This is for when market is going on a bullish momentum and change of character, and what happens? Change of direction. But this is not a change of character, this is just a shift in market structure or in a mitigation zone. For retail trader will tell you this is an M, then they'll put their line here. Retail trading, they'll put their line, I think around here, I can't recall, around here. Retail traders, they'll tell you when it comes, they'll enter the trade when it breaks out with an engulfing candle or source like that. It's the same thing, but we call our own mitigation block. For the situation whereby it is selling higher, lower low, lower high, now I want it very big so you can see it clearly very well. We have lower low, lower high, lower low. Okay, I did it wrongly. Okay, sorry, I want you to see it clearly. I did it the other way around. Now market is selling, right? So it's lower low, lower high, lower low. Okay, lower low here, did not break here, then shifted market structure, came back here and started going in another direction. Can you see that now? Can you see what happened? This was meant to come out here and do what? A break of structure as a bearish trend, but nothing happened. If you put your line here, you realize that it formed what? A W. It came here and took the other block here, the last one that had created an impulse move to break the structure, and went up. For retail traders, they'll say W pattern. They wait for it to come back and they wait for an engulfing candle and they'll tell you they enter the trade. We are calling it mitigation block. Do you see it now? We're all doing the same thing. Mitigation block. We enter that other block that was meant to break a structure to make it a valid order block, but there was no break of structure to make it a valid order block. The other block was, if I use the word destroyed, was not valid, invalid, but did a shift in market structure and broke that swing under here and came back and retested that zone and went up. Now, example on the chart. I hope this is very explanatory. This is for a bearish momentum trying to change trends to a bullish momentum, and this is for a bullish momentum trying to change trends to a bearish momentum. Now, let me try and find one for you. It's always very sweet on lower time frame. I like it a lot on lower time frame. Okay, now see one here, very sweet. Okay, now if you can see break of structure, right? If you can see, right, this market came and mitigated this breaker block. It's something that you know but because of too much confusion, you don't think you don't know it, but you know it. There was a break of structure inside here, inner structure, right? We are now expecting this candle, this one to mitigate this candle and do what? And come and break structure here. Can you see it? Right? It did not take place. Instead, it made up here invalid. It came and broke up here invalid, making mitigation got a very sweet zone if you can find it for entry, a very powerful zone for entry. That was why markets came down to the mitigation block, and you can see the impulse move. Anytime you see a mitigation block, just grab your copy. It's a good zone. This one is a mitigation block, but you will understand it. I'm already using mitigation block, so I know how it's weirdly placed, but I'm trying to find something I can easily understand. Okay, you can see this one here. Market was meant to come, this was meant to come up here and what? Come and break structure here. But what happened? It was broken up here. This candle here broke out, breaking the swing points in, making it invalid, the other block invalid. What happened? Market came down here, entered. Usually your stop loss is usually above here or here. Trying to find good mitigation block for you. Based on the direction of the market. Okay, bear with me. I'm trying to get you good examples of mitigation block. Okay, I have one here. The market was meant to break out here as a break of structure. Can you see it? It's a sell momentum. Can you see? And market what? Market validated this swing point instead of to continue direction up and broke it upwards. And what do? You mark this whole point as a mitigation block, but don't go against the trend though. But that's the mitigation block for a bullish momentum. You can find it round. If you can go around and practice it, you will be able to know the difference between a mitigation block and what other block and a breaker block. I'm trying to find other mitigation block. It's also a mitigation block, but I don't really like it that well. It's a mitigation block here. There's a small one. There's a break of structure. It doesn't create break of structure. Okay, and you can see here there was a break of structure here. Can you see that? Right now this swing point was meant to hit this other block here and come and create a break of structure here. But what happened? This swing point was violated. Can you see it? Was violated, making that zone a mitigation block. And you can see market came to that zone. Usually you put your long position there and put your stop loss here, and you can target any point you want to target. Even though you refine the zone or wherever you want to do your chart, that's how mitigation block works. Let me find you another sweet one. Now you can see now market evaluated this swing point. You can see it, right? And what happened? You see market came back there and reacted. So a lot of people tell you that they like trading mitigation block because mitigation is a very, very nice zone. If you can find it and you're able to catch it on time, just know that trade is a very nice trade if you understand how to mark mitigation block. I'm trying to find one is a breaker block. It has a break of structure. That's a breaker block. Let's find mitigation block more for you. Well, if you can use the example I showed and practice it, there's meant to be a break of structure here, but this is the mitigation block. I can take this point here as my point of mitigation block. Don't forget, your stop loss should always be below the candle here. Below the candle that you see mitigation block, other block, below it should be your stop loss. They can target the swing points. And you can see it was a nice trade. So mitigation block, I gave a diagram on how to locate your mitigation block on the charts. If you can take your time and draw it and go around the chart and start finding it, how it's being created, I'm sure your trade will have a little bit of improvement, a lot of improvement, not a little bit. Don't forget to subscribe to my channel. I have more amazing content to give you. Subscribe on the channel, ask your question on the comment section. I try my best to reply everyone one by one based on the questions they ask me, and Yeah, you can join Telegram group and also use our broker link to open a broker if you're new. We'll guide you on how to go through the whole steps. Thank you very much.